Good afternoon, ladies and gentlemen. First of all, let me thank Stephen, Chairman Stephen, and CEO Clement for having me and also have gathered this very distinguished panel of speakers. I am painfully aware of the fact this is a Friday afternoon, and you are very resilient. And so I've agreed with my panel that we work doubly hard to prevent you from falling asleep. All right, so we promise you, as far as we can, this will be an interesting session because the topic that we will cover is highly, I suppose, fluid, put it mildly. Now, let me go right into this session. In about the next 59 minutes, I propose to divide the session into 4 parts. Part 1, I would just talk about generally or ask panelists to speak generally on what they understand Web3 is all about and how Web3 would affect the ecosystem that we are familiar with. All right, this is the general discussion. And the second part is highly pertinent to the theme of today's forum because this is insurance forum. So we should talk about how would Web3, especially in the context of decentralized finance, present challenges for the insurance sector, which up to now has depended very heavily on highly regulated, trusted intermediaries such as insurance companies. And the third one is equally interesting. The third part, it will be talk about in this decentralized finance, where transactions will take place not through the ledgers of trusted intermediaries. What does it mean for law enforcement agencies and regulators in terms of enforcing AML and fraud and also financial stability, investor protection angle? That will be the third one. And I would like to leave some time for discussion, for Q&As towards the end of it. All right, without further ado, let me go to Keith. You're the first one. The first theme that we will be covering it will be understanding Web3 and its ecosystem. Lots of people, well, I think if my own survey suggests that most governments of developed countries in the region and in Europe and North America, they have made a lot of statements embracing Web3. Digital age, digital finance, there's no doubt about it. They all talk about how this new age would change the way in which we do things, socializing, doing business, production, everything else. But there does not seem to be a consensus on what Web3 entails. Some would say it's all about cryptocurrencies. Some would say, no, it's not cryptocurrencies, it's metaverse. Some would say it's AI, big data. So my question to all the panelists is, how do you see Web3? What does it mean to you? How would it affect our ecosystem? Keith.
Thank you, Norm. Web3 is definitely not only limited to crypto assets, put it this way. So I guess there are some common features. The key features being decentralization. And underlying technology are mainly blockchain, smart contracts, and all that. So the concept of Web3, as I understand it, it's disintermediation. It's to provide fast, transparent, and in a way, in financial world, the idea is to democratize finance. So everybody have, connections to the internet, a wallet, can carry on investment. Now, that's a sort of the idea. I'm not saying that it is happening. I'm just saying that that's the idea of Web3. The main concept being decentralization. Now, in the securities and futures sector, well, the change is that we see a lot of virtual asset, but you cannot ignore crypto asset. You cannot ignore Bitcoin. You cannot ignore either they are major virtual assets in the market at the moment. So we regulate centralized virtual asset trading platforms, and they are responsible for selecting products for their customer. Now, back to like a few years back, there were a lot of issues about ICO, about different kinds of coins. There are thousands of coins in the market. So operators will have to have a very stringent screening requirements for the selection of coins for their customers. So that's number one for our license VATP. Now, recently on product level, we see two trends. The number one trend is the crypto assets with traditional financial TradFi wrapper. So you see products like Bitcoin ETF, for example, Ether ETF. So the advantage of this product is this. Everybody who wants to gain exposure in crypto asset, they can just use their securities account, opens with banks, with traditional licensed corporations to buy an ETF and gain exposure to Bitcoin, to Ether. So that's the trend, one of the trends. The other trend is the other way around. It's the traditional financial product with a technology wrapper. So that's tokenization. So we already have products like Green Bond, for example, but they are using private blockchain. So we have heard a lot of ideas about tokenization of collective investment scheme, about tokenizations of commodities. Now, the good things about all this, it's fractionalizations, it's easier to trade, and hopefully it would cut down the cost and the intermediation in the process. So I guess I'll stop here. Right.
Okay, Keith, I was struck by two words you use. I hope we have time to come back. That is disintermediation, which is DeFi, I understand. But then you mentioned the word democratization. Some would argue is equivalent to greater financial inclusion. Okay, let's come back to this point later on. Professor Hui, now,
Thank you.
Can you say a few words about that?
Yep, thank you, Norman, and thanks, Keith, for giving us a very good start on how we can actually characterize Web3 in terms of cryptocurrency and tokenized asset. I think Keith's elaboration is very clear, and I think it's a nice one to start the topic. For me, technically speaking, obviously decentralization founded on the blockchain technology is the technical characteristic that most people would use to characterize Web3, but that's somewhat abstract. For me, I would like to add on an additional perspective, and that is a lot of it is really about innovation. The fact that in a conventional society, including the financial world, we see a lot of limitations and gaps right now in the existing infrastructure. We have regulation, we have licensed institutions, and along the way in that entire ecosystem, there are a lot of people's needs that are not, very well served at the moment. And that's why a lot of people were considering if we can disintermediate some of these institutions and also try to think of innovative solutions to help address the gap, to help people. And I think this is actually one major motivating factors that power a lot of these Web3 applications today, whereby a lot of novel technologies or people in the industry thoughtfully think of some new solutions, hoping to decentralize the power from the institutions to help people address a certain need. And I think to me, that's the most interesting, although it brings some problem, but that's the most interesting aspect of Web3 right now, where a lot of new ideas, a lot of new innovations actually came by.
King, your theme is that through disintermediation, DeFi, the cost of undertaking transactions, especially financial transactions, and the settlement will become much more efficient. Therefore, it would allow small guys to be able to afford investment and other activities.
In other words, they help in inclusion.
In other words, the intermediaries are charging pretty high cost fees for such transactions. Okay, we come back to that point later on. Yat, what do you think?
Right. So maybe I'll describe Web3 from the perspective of, I guess, what effect it will have on most of the population, we think. And for us, by the way, we think of Web3 as something that will be the next internet. Basically, everything will be powered through, I guess, Web3 technologies. To understand that, let's draw back a little bit to Web 1. Web 1 was a web of read. This is where we democratized information access, where we were able to get information relatively freely online, and that actually created another form of disintermediation, which is that of knowledge. In other words, a trader in selling rice in China was not able to get the fair price of his goods because someone in what it was sold for in America, who could see online, oh, you were charging this, so I need to get my fair share. And it sort of created a different set of intermediaries, like the Alibabas of the world and the eBays and the transaction layer of information. And Web 2 was the social web, basically the web where you can read and write to it, meaning we were able to contribute data to the network. So things like Wikipedia, message boards, Facebook, Instagram. So all of us currently live in Web 2. When we upload photos and we contribute, what we're doing is we're giving data to the platform. And we're actually giving value to the platform because you're giving them data. And so with Web3 is that actually we have the ability to own essentially our rights in this. In other words, Web3 is the ability to read, write, and own what we contributed to the network. And to us, tokenization is a form of stakeholder ownership in the network. So when people talk about Bitcoin, one way to say, yes, it's maybe a currency or an asset. But another way to say is it's actually ownership of a nation almost, right? When they talk about the nation of Bitcoin, you have certain rights attached to it. When you own, for instance, land in something like Sandbox in the form of a non-fungible token, you are like a landowner in a way, virtually, but in the same way that you own real estate, maybe in some district in Hong Kong, it comes with rights and entitlements and governance around it. So to us, Web3 is a web of ownership. And I think the real thing that we think Web3 will solve is the kind of inequality that happens when right now we're giving value to Web2 platforms. All of you who have followers on Instagram or your insurance companies that probably have lots of, using online platforms to generate value, these users don't belong to you. Every time you use a platform, you enrich Facebook, you enrich Instagram, you make TikTok bigger. I mean, all of that. You don't own them. And in Web3, you actually have a direct relationship. So when we talk about disintermediation, it's not just disintermediating the sort of transactional nature. It's also disintermediating the platform in terms of the relationship with the customer. And so value can then more fairly transfer. And so you will have the same effect with property rights as you had in the physical world, like how the fact that we own physical property is the reason we can have a mortgage, for instance. We can have insurance, and we can have all these services and products. But in the digital world, you can't do that because actually, who owns those digital assets? That virtual sword in the game is not owned by the player. It's owned by the game company. That those million followers that you have on Instagram, do you actually own that? You don't own that. When Elon Musk acquired Twitter and renamed it to X, the person who owned the @X handle, he lost it. It was just taken away. It's like someone going and saying, this was your property. Not really, I'll just take it away from you. And then he said, oh, and we want X to become a music platform. So the person who owned the @music handle that had 600,000 followers and he had a business, literally the equivalent of an eviction, just like that. He just lost it like that. So we are completely living in a kind of digital feudal society in Web 2. And in Web 3, that's a way in which we can, when you talk about words like disintermediation, democratization, actually what it really means is that we're taking control back to the internet, to the very people that have given the power to the internet, which are the people themselves.
Thank you. Yeah, you also brought out a very fundamental point. It's not just about financial disintermediation. It's the migration or transition from Web 2, in which contributors of contents and data do not generally have a say or fair share of the value they have contributed. They're all controlled by the platforms, Instagram, Facebook, whatever. They have no say, and if you do not behave, they'll kick you out right away. And so in Web3 will be read, write, and own. Therefore, the creator of content, provider of data would have greater say in the intellectual property rights, copyright.
Correct. And just to add on this point, to our view, data is the most valuable resource today, right? If it wasn't for data, you wouldn't have ChatGPT, you wouldn't have self-driving cars, you wouldn't have any of that technology. But who actually made it possible to have self-driving cars? Everyone who drives a Tesla basically just gave data to Tesla to do it. So we're working for the platform.
Most people don't know that.
Most people don't think of that because they don't think that they're actually, like every time you're uploading a photo to Instagram,
correct.
you're doing free work for Instagram, actually. You're employed by them, except we're the product.
Okay, good. You also use the buzzword democratization, but in a different context, but equally fundamental to our discussion. Last but not least, Peter, can you, what do you think? What does Web3 mean to you?
Well, I think I cannot elaborate, better than what Yat has just mentioned, but perhaps in simple terms, so that you can easily take away is that we are talking about the third generation of web. Yeah. So the first generation is one way, so data dissemination. So you just get information data, and the second stage or second generation is that you actually can have interactions. You also contribute data, but in this now sort of very data-driven world, the information or the data that you contribute actually are helping others to build up their asset. You are actually providing them those information, but you have no control. Yeah, and you do not actually, like what Yat mentioned, get the fair share from where they can profit from. And Web3 is basically the new generation of web that actually you have full control of your data, your contribution, and you get relatively better, fairer return. Another example that you are all probably contributing to, which help Google make so much money, is Google Map. Yeah, imagine by using Google Map, you are actually contributing the traffic situation to Google Map. Yeah, so that you can then get information back to facilitate your travel and so on. But that's the only really minuscule sort of return that you get because you actually contributed quite a lot. You should get back more. In Web3 world, you are getting those back. You're creating those assets, and you are getting the fairer return. And to the second part of Norman's first question, actually, that people often confuse Web3 with crypto. Yeah, usually they just put an equal sign, to those two. And I have to say that I cannot agree more with all panelists sharing, including Norman, that this is definitely not the case. Web3 is so much more than just crypto. Crypto is just one kind of financial, you can say, application of the Web3 technology. How I define Web3 technology Web3 would be any application that uses blockchain technology to generate transactions and so on. And crypto is just one form and related to financial. There are so many other financial applications using blockchain that can be called, that are in the sort of Web3 area. And there are even more non-financial applications using blockchain technology. And if time permits, in the later part, maybe through Q&A or whatever, I can elaborate more non-financial related application using blockchain, which to me also quite have the potential of revolutionizing a lot of the daily life that we have.
Thank you, Peter. That's a very good way to wrap up our discussion on part one. Now we quickly move to part two, which is what this insurance forum is all about. Now, in my opening remarks, I talk about what panelists talk about DeFi. It's a core feature, right, of Web3. But as we understand it, the way the insurance sector is supervised and regulated is basically based on the architecture that you have very trusted intermediaries, the insurance company, reinsurance company, and maybe some brokers as well, that you have licensing requirement, you check the fit and properness, and you actually supervise the conduct and the prudential requirements. This is all very well. But in DeFi, you don't have a central party or company managing it, right? Does it present a challenge for you? Because this intermediation means insurance sector losing its business to blockchain? Or does it mean it will present new opportunities? Now, maybe I start from Peter. your Cyberport has been home for a couple of what do you say? The virtual
insurers. Yeah,
virtual insurers.
Yeah.
They are benefiting from this Web3 kind of ecology. Can you start with you and comment on what I've just described, opportunities or challenges?
Sure, yeah. As Norman gave me the chance to advertise a little bit on the things that we do, yeah. As you all know, Fintech is one of the key focus of Cyberport's clusters focus. And we basically groom companies within our community to facilitate some of the policy, development within in the Hong Kong government. Start with the virtual bank. Yeah, there are 8 virtual banking licenses issued by the Monetary Authority. Norman knows that very well. The first 2 that are in operation in service from Cyberport. We have also 4 virtual insurance licenses issued. 3 of them are from Cyberport. Actually, I believe some of them are here too. And then recently there is this virtual asset license regime. And the first platform that allows retail virtual asset trading is also Cyberport company. So we do not know this ourselves, we are not the expert. But then, our community members actually are quite well versed, in the development of this, and we learn a lot, from them. And in my context, to answer, Norman's question just now, I've done a little bit of homework in talking to the virtual insurance license service providers in Cyberport, and to them, actually, this is an opportunity than a challenge, because this gives them actually new areas of insurance against. Yeah, because in Web3, there are going to be a lot of new applications using blockchain technology, and in particular for crypto-related transactions. There are quite a lot of potential risk in the consumers sort of, or the retail users purchasing these cryptos and doing transactions related to Web3, this kind of virtual assets. So to them, this is an opportunity because they are providing products actually to work with some of these virtual asset trading platforms to provide insurance products to insure against potential risks, like your wallet, Web3 wallet being compromised. So you can purchase insurance to secure yourself, to reduce your loss, potential loss for that. So this is to them actually a new you can say asset class that they can insure us against. Yeah, so to them it's an opportunity. Yeah, but of course this is a little bit different from what I think Norman has sort of alluded to about using blockchain technology to the intermediaries, the whole thing, and this becomes challenge for conventional service providers who are the intermediaries. Yeah. But there is also opportunity being presented. Yeah.
Okay, thank you, Peter. Let me turn to Professor Hui. Can you say what you think of the challenges or opportunities for the insurance sector in the Web3 era?
Thank you, Norman. And I think Peter's suggestion is a great one. I don't think I can add a lot to his points, but I can try to kind of summarize the idea and distill it a bit further to help everybody see it more clearly. Obviously, insurance in itself is a business that pulls people together, right? It's a risk pooling and sharing business. And if we go back to what we discussed in the first part of this panel, whereby blockchain itself is, or Web3 itself is more about decentralization and democratization. They have a direct competition with the idea of insurance, in fact. So that's the challenging part. Supposedly, some of the Web3 applications can do what insurance does. But on the other hand, we have to recognize the fact that we don't really just live in a digital world. Maybe except Yat, right? His own company can be entirely digitized.
I'm still physical. So
The entire business is digitized. But you know, a lot of the applications today that we have in finance, in insurance, and in everything else, we have a physical body that is a connection. And I usually call it a last mile. You know, the blockchain world can do anything. Web3 can do anything in the digital world. But at the end of the day, there is a physical connection. And that physical connection right now is actually a big, major risk factor that we are facing. Look at the collapse of several cryptocurrency exchanges and some of these other Web3 applications, which ended up look like a fraud than a real application. I think there are a lot of risk that people involved in this society are facing right now. And I can see a lot of value where insurance company can come in and play a role. Like Peter has suggested, perhaps insurance can help insure the crypto assets, right? But it's more than crypto asset, I think. We have some other goods that are moving in the physical world, but their records and data are being traced on the Web3 system. And perhaps insurance can help there as well to help make sure everybody would have a bigger trust when they are participating in the ecosystem. So other than a challenge in itself, which obviously part of it can be a challenge if there are people who are doing a peer-to-peer version of insurance in the Web3 world, but I think that will be a minor fraction of it. The opportunity, from what I see, is even bigger for the insurance industry, given the fact that there is so much connection between Web3 and the physical world.
Thank you, Professor. Now, come to this, you've been questioned whether you are a physical existence. It looks like a real person to me. So, yeah, what do you think?
Questionable, isn't it? But anyway, so first of all, agree generally. I mean, the whole sort of Web3 space underpinned basically by many of the tokens is about $1.6 trillion. And even NFT sales, just the last 30 days was $1 billion. So we're talking about real value, real money here. It's worth insuring. I think the easier thing that a lot of insurance companies can focus on are RWAs, real world assets, which is basically a big trend, but makes sense when you think about taking sort of physical assets and tokenizing them. What insurance companies and actually banks do anyway is they are really intermediaries of trust, right? You work with them because you trust them. You're able to do business with them because it's insured, for instance. All these type of things. When you have real world assets, I think the current insurance model works quite well. And so the trend for RWAs is actually, I think, a very natural one for existing insurance companies to grow in. But I think when it talks about stuff in DeFi specifically and everything that's happening on-chain essentially through the permissionless sort of trustless nature, I think replaces many of the traditional functions of what we thought banks and insurance companies would do, because you no longer need to go to the bank or an insurance company to verify something. You can just literally go on-chain and verify it directly. And I see this really where the insurance companies in the future, outside of if they want to go entirely digital, must become digital in construct themselves. Meaning you have to become software companies, you have to integrate AI, you have to basically be part of that ecosystem. For instance, I think antivirus companies are insurance companies of the Web 1 era, in that sense, right? They're not insurance companies in the classic sense, but why do you do antivirus? Because there's malware and there's spam. You're paying a small subscription fee that doesn't guarantee, but gives you a certain sense of security that you basically have a safe desktop or a safe mobile phone. That's insurance, effectively. But it's a different type of insurance. Maybe not insurance the way that you think of it, but it's still a software insurance against my data or my private content, because most of the information you have on your laptop before Web3 wasn't valuable, right? Because you didn't have Bitcoin on your computer, for instance, right? But now that you actually can store literally millions of dollars of value on your desktop, potentially, then actually the kind of insurance you need is a step level, but that has to be done with software. So I think there is a need for the insurance company of the future to actually integrate technology and software as part of it. Today, a lot of companies already integrate, data knowledge, right? Every company is really a data company today, right? Banks, insurance companies, even Formula One racers, right? I mean, they're all data companies. So they've already integrated technology up to one point. But I think in Web3, it has to be a core component of what they do.
Thank you, Yat. I think you also raised another point, which is it's not disintermediation which is presenting a big challenge for the insurance sector. You probably have a new class, asset class, which is which requires insurance protection. It could be tokens. It could be tokens stored in your laptop. How would one underwrite the risk? I really don't know. For me, a good company should not underwrite my laptop because I would lose them all the time. So, but there were a lot of, you talk about real world assets, which has been tokenized of tangible, conventional assets, which would otherwise not suitable for insurance or not suitable for finance. I think this is a kind of a new horizon for people to think about in the Web3 world.
Yeah, I mean, just to add on this topic, for instance, you might not be okay with someone storing your valuable NFT on your laptop in a hot wallet, but if it's in a hardware wallet, or maybe if it's even in a sort of a cold storage solution that the insurance company has trust and understands it and says, oh, I know that these guys are secure, then you can insure against that. Whether you use Ledger or Hex Trust, it doesn't really matter. The point being that, you know, once you have an understanding of that technology, then you can insure against it. Or maybe even you know, the insurance company writes their own smart contract software and then has you use that software as a way to ensure that, okay, if you're using my software, then I can secure that, for instance, because I have trust in what I've built. Right, so that's what I mean when the insurance companies of the future have to be integrated with the technology. It can't be sitting outside, depending necessarily entirely on third parties.
Thank you. Keith, what do you think?
I think there are great opportunities for the insurance sector. Just hearing from what Yat said. Now, for all the virtual asset trading platforms, they need to buy insurance or provide compensation arrangements. So insurers, please provide insurance to them. So this is an opportunity for you to do business. Now, Yat said, mentioned a very important point. The virtual asset itself is already a big amount. So how do you insure all these valuable investment products? There are lots of risks, technology risks, cybersecurity, smart contracts. How do you ensure your the transfer in the blockchain would not lose the ownership and all that? So there are lots of risks relating to technology that would require insurance. So and therefore, it's one of the opportunity is how for the insurance sector to provide your service to all this. So you really need to have technology expert on this. Number two, of course, is how you design your product, how you provide your service without intermediaries. So again, this is something for the whole insurance sector. I guess the real challenge is really, from our experience in dealing with all the service provider, it's talents. It's whether we have sufficient developers in the market to help us to further develop this market. So I think there are lots of opportunities, but the real challenge is talent.
Okay, right. Professor Hui?
Yeah, Norman, if I can add one more point. I think we mentioned a lot about how insurance can potentially help Web3's development, you know, insuring the virtual asset and so on. I just want to add one more point, and that is actually the insurance company or industry itself can also benefit from Web3 because for all we know, there are a lot of inefficiencies right now in the insurance process, right? There could be agency issues, there could be malpractices, and I thought the enforcement due to the smart contract on Web3 can potentially actually help the insurance industry to run the businesses even more efficiently as well. I think we should not omit that benefit as well.
Okay, thank you.
Norman, if I may, you know, add
sure,
one more
Peter.
point. Yes, on what Keith mentioned just now. I think, and also what Yat mentioned about the challenges. I think even though I think in general we all agree that this is a new there will be a new asset class that we can insure on. So there is definitely more opportunities, but we have to be ready and get ourselves technically savvy enough to understand it. And then the challenge to me is what Norman mentioned just now. People will still be able to sell the insurance to you in your protecting your laptop, as long as they have a right way or good way to calculate the insurance premium. Yeah, they will just have to charge you a higher premium, yeah, if they have the relevant way. But then under this new asset class, because it's so new, that there are still different ways and not enough probably data to help us to assess, to do this kind of the actuary properly. Yeah. So this is, I think, the challenge that we can see for insurers, but also creating new opportunities for another kind of Web3 related companies. We see also in our community new Web3 companies coming up to provide such services to properly evaluate whether certain Web3 companies providing a virtual asset have gone through proper process within their system algorithms, whether they have a proper underlying chain to secure the whole thing, and all these things, yeah. And they are also providing similar services to regulators like SFC and so on to help them assess in the process of issuing the license and so on. So these are again, new challenges, but then generating new opportunities for different kinds of companies coming up.
Okay, thank you, Peter. I would like to move on to part 3, which is tricky. We talk a lot about decentralized finance, disintermediation, doing away with the middleman, which ironically is the basic architecture in which modern supervisory regulatory systems is based upon. You always depend on licensing regime. You make sure these companies conduct its activities, businesses properly, KYC, treat customer fairly, blah, 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 lots of things. So decentralized finance means you don't have the central party, the middle party, right? So this session, I want to ask panelists' views about what will be the regulatory challenges that would lead to. Now, I just say theoretically, there could be a range of options, but let me describe the two ends of this range. The one end of this range is that DeFi is bad news. It doesn't help, doesn't facilitate law enforcement and regulation. So we just ban it. You're not allowed to do any decentralized finance. The other end of this range is the opposite. Since it's so difficult to regulate, there's no central middle party that I can have any regulatory handle, I just give up. Just let go. Just do whatever you like. It's also my capability to handle it, right? So I would like to invite the panelists to comment on this particular theme. Let me start with Keith.
Thank you, Norman. I think we discussed this backstage. Now, I have to answer this question very carefully.
Yeah, please do.
Right.
You are the regulator. You are the only regulator on this panel.
Now, if the decentralized financial products amounting to something that's under the Securities and Futures Ordinance, you're beginning now. Like, for example, it's a collective investment scheme. I put out an advertisement collecting Bitcoin from you guys to buy virtual land, okay? And then we get the return, and I will distribute the Bitcoin back to you guys. That would be collective investment scheme. Then we regulate, because even though you have everything on blockchain, you don't have any intermediaries to distribute. We're very quick, right? Everything settled on the blockchain. Still, it's a collective investment scheme. It's still falling under our net, okay? But if, for example, you want to buy a Blackpink concert ticket, okay? And you have tokenized your ticket, and you want to sell it, then it might not be falling within our regime. Then I'm afraid we won't be able to do that. Now, there are lots of other applications of DeFi. Selling air ticket can be tokenized. So quite a number of different use of this technology. So, and we look into the substance of the matter. And most of the time, we are able to identify the one who are in charge of designing the whole scheme, right? So if it's fall within the CIS regime, for example, then we'll be able to catch them. So I must say we have to fall back to a very cliched notion, is that if it's within the SFO, then we can take action. And we look into the substance of the matter. And most of the time, there are either issuer, raiser, people who have control over the whole blockchain, like controlling the governance token. Then we look for them, chase for them. So I guess that I will stop there, see if there's other views.
Good.
Yeah.
Okay, Professor Hui.
Okay, I would tend to see this a bit more simply. Well, first of all, I'm an academic. You know, academic is a bit more idealistic. I'm leaning more towards the second end, characterized by Norman, because as we all know, the Web3 world supposedly is democratizing access and transactions. And when people go underground, it's really difficult for us to actually police them, as we have seen in what some other jurisdiction has done. They might, illegalize the trades in Web3, but people will still do it, and there's nothing you can take down when it's a decentralized world. So I tend to think that instead of just making it outright illegal or ban it, we might want to embrace it, but in a more tactful way. Perhaps, for example, so far when we talk about decentralization and democratization, it sounds like we are making it very extreme. It's either completely centralized with an institution or completely decentralized when everybody acts individually. But actually in the Web3 world, I don't think we necessarily have to have such an extreme. We can actually have some sort of a community, a consortium, whereby they are running these DeFi applications. And if we were to make the system functioning more efficiently and effectively, I would think perhaps the regulators can actually consider how we can work together with these consortiums, with these smaller communities, build more trust into these communities so that people can start to come back into these communities instead of just going underground, which anyway, we will not be able to ban them completely. So my take is, instead of trying to fight them, why not we work with them and build more trust so that we, naturally incentivize or pull people back into these somewhat regulated, still DeFi community, although it might not necessarily be fully decentralized. And I thought that might be a more promising way.
Okay, so Peter, what do you think?
I also agree with the professor on his point about, we actually probably have more needs for more justification for having this regulatory, proper regulatory regime. Now, because if we de-intermediarize the whole thing, it's not like the conventional system that you actually have different layers in between adding value to reduce the risk. So if you are directly transacting the users, directly transacting with the service providers without that many value-added service providers in between, then the risk tends to be more direct and higher. And that is why you probably need more trust built in the whole thing, and hence the need for proper regulatory regime to assure people of that trust if you really want to develop this service or expand this service properly. So to me, I think there is definitely more needs for regulators, and it's just a matter of how the regulators, can further, enhance their current, regime to properly manage the whole thing. That is, to me, a challenge, because this is something very new and very technology driven. The technology itself is also quite new. That everybody is learning. There are different application business models coming up that people and developing very fast that people are not familiar with. So hence there is this question, yeah. But definitely to me, it's all the more important for regulators to familiarize themselves and to enhance their current, regime to do that. And yeah, that's basically, I think, the need for that. But then the challenge is how, yeah.
Okay, that's a big question. How?
Norman, sorry.
Yes,
Since
Keith.
he mentioned a number of times regulators, I think that it might be a good time for me to jump in here.
Please do.
We issued a circular in November about tokenization of products. I fully agree with you, Peter. There are actually new issues we need to deal with when dealing with all this. Two main issues. Number one is ownership. Because when we use smart contracts, when we use different kinds of protocol, the key issue here is how do you decide the finality of settlement? And how do you decide the ownership? Is it on your ledger or on the blockchain? The second issue is, of course, technology, cybersecurity risk that Yat mentioned earlier. So there are two key issues that we need to deal with, and the details are actually in the circular. So I won't repeat.
Okay.
Thank you.
Please read the SFC circulars. Yeah.
So one of the great benefits of using stuff on blockchain is the permissionless sort of trust layer is that you can audit the entire trail. So one of the challenges about fraud is you actually don't know what happens behind the scenes. That's how fraud takes place. When all the problems you hear about FTX or all the problems we had before, and frankly, other kind of banking crises that are unrelated to crypto, it's because we don't know what happened. But on chain, if it is truly DeFi and is actually happening on chain, you can track every movement. So for instance, even when there's theft happening in sort of crypto, the actual thieves can actually sell their crypto because all the exchanges basically block off the wallets around that. So in some ways, it's a little bit like a community-based trust system that was established today because regulators don't have a hand in it yet because they maybe don't understand how it works. But by the time they do, actually what's happening is issuances are going out to all the exchanges saying, do not transact with that wallet that stole the money. And now, one of the most famous, I guess, crypto hackers is an agency, I call it agency, whatever you call it, Lazarus, right? They're basically a North Korean agency. They're known for having transacted billions of dollars of fraud. Most of their tokens are still out there in these wallets because they can see that it's there. And so they've been isolated. And that's kind of the current form of protection. It's not ideal, right? But I think that's kind of, to me, sort of the tools already out there. It's just the knowledge how to actually sort of audit that. So to me, actually, DeFi provides better protection. Because at the end of the day, I think the way that we insure ourselves broadly is if we actually all know how to read transactions online better, if we understand how blockchain works as a collective, then we can protect ourselves against it, right? It's kind of like financial literacy. If we are more financially literate as a whole, then it's harder to defraud you. That's kind of what happened with the early days of the internet. The fact that we actually had access to information meant that we can now actually get fairer deals because the person, we used to make, people used to make a lot of value by just information arbitrage. But now because you have all this information online, this information arbitrage went away and you had to be more honest in your transactions. That's actually what blockchain does on the value chain. And my other comment I would say is that, one of the things about DeFi is that it actually scales this kind of sort of, I guess, cash-based transaction digitally, but in a manner that is actually privacy securing because I don't have to know necessarily who the individuals are. I can know that through the finality, but on-chain transactions can be transparent, but I don't actually have to know publicly that I'm doing business with Norman or I'm doing business with Keith. I can see the transaction, but I don't know who it is. So there is this public security, but actually the privacy around that. And to me, that's kind of what cash used to be, right? Which is actually cash has many of the elements of DeFi in the sense that, once the cash is in circulation, it's not like any central bank can actually really track where the cash goes unless it actually hits the bank, right? And when I give you a dollar note, I give you a dollar note, actually we're transacting, off chain, but actually in a decentralized manner. So I think DeFi is really that, but on chain, preserving the privacy, but also giving technology scale for the first time.
Thank you. Anybody want to add anything? No? All right.
Norman, perhaps one
Peter.
point. Yeah, what Yat mentioned just now is absolutely, totally agree with that. And I want to add on to that, and that is why I mentioned earlier about, in our community, there's a new kind of companies coming up. Yeah, they actually knows technology and also knows the business and help to do all these proper audits, so that you can then actually be assured that when these are happening on chain, that this is a proper chain, that these algorithms are proper, and at least one of these companies has very quickly, in less than a year, become a unicorn. Yeah, because of these business generating. Keith know which one that I'm talking about. So they are really good, founded by a Columbia professor. Who really studied this, in detail and creating a new business, yeah, from this Web3 trend. Yeah.
Okay, thank you. Then I will move on to part 4, which is Q&As. I got a couple of questions from the floor. The two questions, same question asked. Many countries talk about Japan, UK, Switzerland, and of course Singapore are taking very proactive steps or even aggressive steps to develop Web3 markets and infrastructure. So the question is, what lesson can Hong Kong learn from them so far, and are we lagging behind? I would like to ask each of you to comment in turn. We have about 8.5 minutes. So 1 minute from you, because I got other questions I want to ask. Professor Hui.
I think I can be very fast. I think it is true in some of these other places, they look very aggressive. But at the end of the day, actually, I was chatting with Yat just now before we come to the stage, and where are the Web3 companies? Actually, they're all in Hong Kong. They are not in those countries, right? It's not just because the government is trying to push for it that these companies will come to a place. I think it's naturally the system within the region, the existing culture, the existing facility, the existing system that is attracting these Web3 companies, right? When capital is in Hong Kong, when there are opportunities, when people are open-minded, these companies will naturally land in Hong Kong, not in these other places.
Okay, Keith?
Well, I'm a regulator, so from a regulatory point of view, the development globally is that about the regulations, it actually started with Financial Action Task Force. And at the very beginning, everybody focused on AML risk. Now, Hong Kong is actually very different. We start back in 2018. We tried to do a comprehensive regime on a sort of course, on a voluntary basis. So we think it will be important for us to have at least a reasonable regulations to have a sustainable development. I think that's very important.
Yeah, I think you're right. We're just beginning. We have two virtual asset trading platform license. Some have applied, were yet to be approved. We have to see how well they do, because doing business under regulated regime is not entirely easy.
I think the development is that it's not just the VATP now, it's also about the product, the trend that I've discussed, the tokenization of products, and the TradFi web for virtual asset. So it's far more than VATP now.
Okay, yeah. Any comment? Are we lagging behind? Are we falling behind?
No, I don't think Hong Kong is falling behind. I think one of the things that you can see about Hong Kong was falling behind a year ago, I would say. But basically, after it sort of started to create the more friendly and open regulatory framework, it invited a lot of companies coming through. For those of you who may have attended Fintech or been to ApeFest, you can see many people have come to Hong Kong for the very first time and were amazed at what was possible. US talent, European talent, and so forth. But just very quickly, what Web3 really does is it opens up transparently the transactional layer of whatever you're building on, which can include financial transactions, right? That's the one point. But it generally opens up every transaction that you can measure on chain. So that means that the kind of cultures and places that are either financial centers or merchant centers, because those are also the kind of places that have always been hubs for transactions, which then include finances. So it's not a surprise that whether it's London or Dubai or Tokyo, or even in the US, places like New York, for instance, those have been the early Web3 hubs as well, Singapore as well. What do they all have in common? They're financial centers, they're transactional hubs for merchant banking and for merchant activities. And Hong Kong has always been that kind of place as well. So to me, Web3 is actually very compatible to Hong Kong's history and nature, and is really for Hong Kong to lose, shall we say. In other words, Hong Kong has a position to be not just in pole position, but to lead the world in this area because of all these ingredients that I mentioned before.
Okay, Peter.
Okay, I'm just going to say two things, but before that, one thing, Animoca Brands is here, a company worth $6+ billion US valuation, so we are definitely not lagging behind. The two things I want to mention is that now, riding on what the Professor Hui mentioned just now about really Web3 companies are here. Now, 1 year ago, when we first announced the policy statement on virtual asset, Cyberport has used Cyberport as an example, because we sort of the fintech hub in Hong Kong with 2/3 of fintech companies at Cyberport. We have around 70-something Web3 companies. Today, we have 200+. Yeah, so you can see the growth in the past year actually have been substantial. But I agree with Keith that the key is really to make sure that we have a sustainable growth. Yeah, and we are all working hard on that. The second thing I want to mention is that we recently have visited by the Singapore, by one, don't want to mention the name, by one Singaporean officials, senior officials who actually looks after this particular area. And in our casual chat, he's basically very, very candid, actually sharing with us that they are sort of putting a stop, on this. Yeah, so we have definitely more opportunities here in Hong Kong. Dubai also has amassed quite a large community of Web3 companies, but we have much better and stronger regulatory regime, than Dubai.
Okay, we have, I think, a time for just one more question for our panelists. Remember, we talk about disintermediation, doing away with this middle parties, and then you mentioned financial inclusion. Can I ask the panelists to comment on this point? How would that lead to financial inclusion? Isn't this something Bitcoin for the rich boys to play with, not for small guys? Why would financial inclusion benefit from this Web3 development? Or who would want to go first? Yeah,
maybe I'll share a story. I'll share a story with, there's a game called Axie Infinity, one of our portfolios. It brought financial inclusion to, I think, 2 or 3 million Filipinos during COVID. What happened is that people were able to play this game, and in this game, they were able to earn tokens. And just so you understand, we don't have to go to the mechanics, but there's a value model that's around the tokenization. None of those Filipino people were people that had financial literacy, that had a university degree, none of that stuff. But because they were able to, and they had no bank account, because when you make $5 a month, you can actually, no bank can afford to bank them. So, but it's basically free to open a crypto wallet. When you do a transaction on the token, the transactional cost is cents, right? So even if they make $1 or $2 or $3 or $4 or $5 a month, basically earning essentially through the digital economy, through what we describe as the open metaverse, they basically were banked, and they then were able to sort of transact with the rest of the world with the income that they received. And now, today, when you look at the SEC commissioner in the Philippines, he openly not just encourages basically a crypto, but he's obviously they have to regulate, but it's become such a major thing that politically, if you're sort of going for village mayor elections, if you do not embrace crypto or blockchain gaming, play to earn games, you can't get elected because it's become one of the major income sources in those places. It's an example of financial inclusion for the kind of places that are unbanked, which is still billions of people in the world, because banking infrastructure alone costs too much, right? If you think about just how much does it cost to do a wire transfer, but then when you're, or for instance, think of all the migrant workers. So in Hong Kong, think of all the people who are domestic helpers. How much money are they sending back, and how much transaction fees are actually captured by a middleman? When that value actually on-chain can be done at a fraction of a cost, how much more value then actually goes into a societal purpose, right? So that's one of the big promises, and that's why also Southeast Asia, South America are actually one of the fastest growing segments because of that.
Okay, anybody?
I'll just
Professor
add a
Hui
bit-
first.
I'll just add a bit of fun to what Yat has mentioned. I know in Hong Kong right now, there are some Filipino helpers who are performing in front of YouTube. And they are performing in front of YouTube because they are trying to monetize, making some side income. And obviously, in that process, you can imagine a lot of commissions is being extracted by the platform. It's not easy for them to collect the money. So I thought this would be an interesting extension of what Yat mentioned.
Yes, let's talk about you own the content, right, or data that you contribute and you create. Okay, Keith?
Quickly, I think it needs a process, and because we have a different people in the population. For those who got the ability, they can eventually, I believe, that they can have direct access, and therefore the cost will be reduced. But for people who don't want to learn, like myself, then you can actually gain exposure by having these virtual assets, having the TradFi wrappers to gain exposure. So I think that I believe that in our society where this sort of culture has already been developing. Thank you.
Okay, Peter?
Yes, I think we may look at it in this way. Yeah, there are sort of two part to the transactions. Go back to your question about how this can sort of democratize the whole thing. To me, one is the user end, and the other is the service or the product itself. Yeah, to the user, in a way, when we use blockchain technology, we tokenize certain things. We basically lower the entry barrier. Yeah, to transact. So and this definitely will include more people with less wealth, to enter into the game. So on this end, we definitely have more inclusion in that sense. And to make this happen, we also use on the service or the product end, we through tokenization allows people to actually transact to or own the right, say, to use certain things. Yeah. So it's not just the thing itself. So we can actually fractionalize, this asset, so that people can own the right to use certain part of the asset. For example, we actually have this in conventional sort of economy, like time sharing an apartment. Yeah. Now, if we tokenize it, then you basically can sort of own part of the right to use of this asset. So this is just a similar arrangement in the Web3 world. That's all. Yeah.
Yeah, I think the last point is important. Let's say you use timeshare. You have a right, usually say 4 weeks in a year, as kind of a owner of this timeshare. It's hard to split it even thinner, because the cost is high. But if you have tokenization as the means of your right of ownership, then you can fractionize to many more, 1,000 of a percent of this thing. You can therefore allow small investors to actually come in if they think this is a good investment opportunity, where in the current regime is just not feasible. They're excluded. I think we have run out of time. Clement's been watching me tightly. So we cover a lot of interesting themes and topics. I think we don't have answers to all the questions. Still a lot more work to do, not only for the private sector, also for the regulators too. I'm glad I'm no longer a regulator. But I think the world is becoming very competitive in this Web3 world. And I think we don't want to fall behind. Maybe we have a slight lead, but that lead is not guaranteed. So we must continue to work harder, and in conjunction with the governments, of course, policymakers, the regulators, and the private sector. Now, may I invite you to join me and give a big hand to our panelists for the views. Thank you. Thank you very much.